Hey, good morning everybody. It's Brian. It's Friday. Friday the 9th. Yeah, 9th of October. Just doing a quick run through of what I'm looking at for the day, things to take note of, things to be aware of in the market. So let's jump right into it. We're going to hit forex really quickly. There's not a lot to do until after 7:30, 8:30 Eastern. Futures market could be interesting today. We're coming into a long weekend. Monday's a holiday. So yeah. Let's do it. Let's pop over here first, talk about the news. We've got Canadian unemployment news coming up in just a little bit. So, as we know, typically the more active currencies, when we watch our currency strength here and try to make decisions around which ones we might want to pair together, we typically want to look at currencies that are actually open and tradable, that are actively, well, that's not the right way to put it. All of the currencies are being actively traded, but there's some that are going to have more activity than others, and obviously those are the ones where those economies are actually open right now. You're going to see heavier volume traded. So your typical opportunities around this time of day coming into the new U.S. session are going to be on the currencies that are being actively traded. So that's the pound, the euro, the CAD, the U.S. dollar, and the Swissy. Those are economies that are open and actively working. Obviously, the yen is traded, the New Zealand is traded, the Aussie is traded, the yen is traded, but not as heavily. They're going to be more heavily traded during their live market hours, which are not in play right now. Not to say that they won't move, but I think I feel like we get the better opportunities on the currencies that actually have market participants in those actual areas and are working. So with that said, the Canadian over here, having Canadian news, that plays a big piece of what we're doing, because we'd be looking at pound versus CAD, US versus CAD, euro versus CAD, and or CAD versus some of those. So anyway, it takes some things out of the mix. We do potentially have, if we look over here, there is potentially, there's not. I was going to say pound USD, there's some potential, but they're both below the midpoint. If we see some divergence here, especially if the USD starts breaking above the midpoint, that could give us some opportunity on, let's say, the pound versus the USD. But right now, that's not even really an option for us, because they're both below the midpoint. So that's not signaling anything at all for us. So, for now, best course of action is just to kind of wait it out. Let the news happen. Let the news do its thing at 7:30, 8:30 Eastern, and then make a decision from there around which direction we want to trade and what currencies we might want to pair together. The euro versus the CAD, it's only moved 50 pips for the day. As we know, it's a little bit higher volatility than that. It's usually around 90 pips on average. So, post news, if we especially if we continue this current trend where the CAD begins to sell off a little bit, then that could give us an opportunity to go long on the euro CAD and continue that current trend, that intraday trend up. But that has to happen after news. We can't make that decision prior to news, because as we know, anything can happen with that report coming out. Spreads widening on high impact news can put us into a trade and take us out of a trade for a loss almost instantly. So, let's just wait for the news to happen, market to normalize after news, and then see what's actually moving from there. All right. Over on the futures side of things, kind of an interesting market that we're in over here. Run up yesterday again on the S&P, flattened out over the course of the evening though. So you've had a big run up. The bias is still long. We have a long bias on the 4-hour, long bias on the 30-minute as well here on the S&P. And but it's flat. It's totally flat right now. It's interesting. There's so many things going, excuse me, in the marketplace right now and in the news right now. So much happening. It could really drive this market very rapidly up or very rapidly down. It is definitely feeling like we're starting to hit some resistance up here, And definitely over the course of the evening, coming into a long holiday, it wouldn't be surprising if if we started to see a little bit of a sell-off today as positions are closed out coming into the long weekend, just given the fact that there's going to be uncertainty. So much can happen over the weekend, as we know, with tweets and with announcements and things that are kind of last minute. That just given that level of uncertainty, folks might be closing some positions to take some of this profit. Excuse me, it's been a run up here, but don't just jump in the market and go short today for no reason. You definitely have a reason if you're looking to counter trend, because that would be very much a counter trend trade. Have a good reason for doing it, something other than, well, I think that people are going to close positions and that's going to pull the market down. What I would be watching today, obviously, we'll look for pullbacks to see if we get lower highs and lower lows that we can then trade off of, trade a breakout from. So we'd certainly like to see some pullbacks here that we could play a breakout trade off the close of that lower high. But what I'll be watching here is if we break down below 34.30, if we break down and close down below this level, I'm not looking to get long again. I would just be looking to say, well, that might be the point where we start to see this thing roll over and see some downward movement. We'll see. So for me, I'm hard pressed to play a break today, a breakout higher. Not to say that it won't. It very easily could just blast through 34.50 and not look back and just keep trucking higher. Absolutely could do that. But coming into a long weekend, I am a little worried about that. So, so I'm not looking to play breakouts. I'd like to play pullbacks and get in at a lower price. But this 34.30 is kind of my decision level down here. We break below this, and I'm not interested in going long anymore. All right, crude's interesting. Crude is in a long bias as well. We've been in a long bias for a while, and it continues to push up. Crude's another one, right now, especially if the S&P rolls over, that could drag crude down with it. So be aware of that, be cognizant of that. But we are still looking at long opportunities right now. We're watching to see if we get a pullback here and can play a breakout back to the long side of a previously closed lower high. That's what we'd be watching for. We could look for bounces off of about 40.50. That's a key level here at the 4-hour mark. If we watch, over here at the 4-hour, 40.50 is a big level. It's been tested, finally broke it. Coming back, we could certainly see a retest 40.50, maybe even the top level of that around 40.60. Look for a bounce off of it. Break down below 40, and all bets are off about what's happening there. If it pulls back down to 40 and starts going lower, that'd probably be a pretty good indication that there's other stuff going on in the market that might be driving what's happening there. So be careful there as well. We're still looking for long trades on this, but we want to get in at a discount. But have a line. I mean, we start pulling back, and I really think if it gets to 40, we'll have seen a cross here anyway with the moving average crosses. Even if they're not crossed, we get down to 40, I'd be hard pressed to look at continued longs on an intraday basis. 40 is kind of that line of demarcation, that line in the sand, just like we have over here on the S&P. We've got a line in the sand, right? That's kind of my line in the sand. That if it goes there, goes below that, I'm not looking to get long anymore for the day. So just another little thought behind that. Gold is pushing higher for us. The 4-hour is still short, but the 30-minute is long. Makes sense. Increased uncertainty in the marketplace right now. There's a kind of this feeling this is getting heavier and heavier. Especially if it's looking less likely for Trump to be reelected, that could send shockwaves through here and just kind of be a catalyst for this downturn. Of course, the catalyst for the upturn would be that Congress suddenly comes up with an agreeable solution for a CARES Act, and then the market just goes bananas. So there's upside potential just as much as there is downside, absolutely. And that's why we just you trade with the trend, and you just put some places, you put some all the words are just going out of my head. You trade with the trend, and then you just look for some spots to say, if we break, below these certain areas, even though it's an uptrend, I'm not really interested in going long anymore, because that could signal that point for that rollover. And then you sit on your hands and you wait and you see if it really does roll over. We don't want to be the first one in. Don't be the canary in the coal mine, trying to short it, when everybody else is still going long, but just have that line to say, if it breaks this line, I don't want to be long anymore. That's kind of the signal to see, are we going to roll over? And if it starts to roll over, then that gives us the opportunity to trade in the other direction. But don't try to be the first one to do it, because again, canary in the coal mine. Why do they send the canary in before the human? So anyway. Gold. Yeah, so gold is a mixed bias. Our 4 hours short, 30 minutes long. Certainly could look to see rallies continue here. We're back up at 1920, which has been a big key level for us. We reversed off of that quite a bit already. It's been tested, and it looks like we're finally breaking it again. This is a mixed bias, so it's telling us not to do anything at this point. So keep that in mind. However, pullbacks a little bit here, back down to the 1915 area, could certainly look at a potential buy on gold. However, if it starts to roll over and it gets down here to 1905, even breaks down below that, I wouldn't look to buy gold anymore on it. All right. So, but it's a mixed bias, so you really shouldn't be doing anything technically. All right. So that is it. We talked about forex. We're going to wait until after the Canadian news and then see what kind of direction we can find there post news. For the S&P, where we have a long bias, we'd still look to go long. However, we have some key points. If it breaks those points, we're not looking to go long anymore. Might be just a good day to sit on your hands. If it pulls back and just keeps falling, be a good day to sit on your hands. Of course, there's the flip side of that we could get some amazing news prior to the weekend, and that rallies the market. And if that happens, then we'd see a little bit of a pullback and then a breakthrough that previously closed lower high. Totally fine. But have a stop point. If it falls below a certain level, call it for the day. Not saying to go short, but I'm saying to have a point to say, if it breaks this level, I'm not interested in looking at longs anymore either, because we are coming into a long weekend. We'll see. I feel like it's a good day for a little bit of pullback. Crude, we talked about the same thing. Gold's a mixed bias. So that is it. I'm going to leave it here. You guys have a great day. Have a great weekend. And we'll see you on Tuesday. Bye.